Hello everyone. Uh, Please watch the video and you will learn about the statement. Somebody showed you the statement. Uh,
Session where you will learn. Welcome to this interactive learning session where you will learn how to analyze a merchant statement and how to use the information that it provides. By the end of this lesson, you will be able to explain the benefits of statement analysis and educate your merchant. Locating the key business data on a statement, regardless of the processing company, helps you to calculate the merchant's key business metrics, like statement transactions, volume and sales, calculating discount rates that are corresponding to the qualification levels, and estimating the competitor's pricing based on the information in the statement. Statement analysis is a very important part of our business. To be successful, you will need to be able to read, understand, and analyze merchant statements so that you can recognize your competitive situation. A statement is a blueprint of your prospect's non-cash productivity. It provides a detailed window on how your merchant processes transactions, and they can develop conversations to better understand a merchant's processing methods. You will be able to gather whether he swipes or keys in most payments, or what type of cards their clients use to pay for the product or services. Overall, it is very important not to focus on price, but to build a relationship. Remember, don't emphasize price if price is not the issue. What are your merchant's hot buttons? Have you discovered them yet? Also, if a value-added product drew interest, educate your merchant and provide solutions for those value adds. After all, you are the expert. And lastly, don't emphasize price if a relationship drew interest. For a merchant, having a professional relationship with a reputable account executive could be the key. Set yourself apart. Become an expert on statements, pricing your merchants accurately, and don't forget to do some interchange management. Let's hit again why it's so important to analyze statements. First, we want to find the true cost to the merchant. Then we want to find out how the merchant's transactions are clearing. Next, we should find out if the merchant is set up correctly. Should it be retail or should they be moto? And is rate really important versus what comes out of their bank account? And lastly, what benefit can you add to the account? Maybe they're not set up with PIN debit and most of their transactions are $100. Maybe they're set up with signature debit now and don't understand the difference between signature debit and PIN debit. And lastly, maybe we can add a rewards tier to help them save money even further.
Hey Johnny, who's this lady?
Merchant agreements are based on several discount rate pricing structures. Let's review these to help you familiarize yourself with each. The Bundle Plus or two-tier pricing includes a base rate plus a surcharge. For example, you will see one main base rate such as a 1.75 as the discount rate, and a surcharge will be applied. Next is the three-tier category, which includes qualified, mid, and non. In the three-tier category, all cards have been divided and distributed by their qualification. In other words, qualified cards are the lowest rate possible for any personal credit card. The next level down is the mid-qualified, which is where most rewards cards and key-entered cards fall at a higher rate. And the highest rate is the non-qualified rate. The non-qualified rate will encompass business, corporate, travel and entertainment, and international cards. Some processors even add IRF and standard qualifications to their non-qualified rate. The fourth is the fourth tier and the fifth tier, followed by the same technicalities as the three-tier. Here, they add a qualification or tier, if you will, for the signature debit cards and the rewards cards to be able to provide a merchant with a lower rate in these qualifications. And last but not least is Interchange Plus, also called Unbundled, IC Plus, or just simply pass-through pricing. This pricing structure is probably the most common for some processors. It really is easy to understand. Interchange Plus simply adds a discount rate to the actual cost on the card. For example, the interchange rate of a personal credit card through Visa without any rewards attached is now a standard 1.51% and 10 cents. The processor will charge, for example, 50 basis points and 10 cents on top of the actual cost of each card, making this example a total cost to the merchant at 2.01% and 20 cents. These are some of the most common pricing structures that you will find in the industry today. So remember to familiarize yourself with statements and pricing so you'll be able to succeed in this business. Here are some important points to look for in each statement. We want to look for the monthly volume. How large is this merchant? We also want to take into consideration the average ticket. It's very important to understand the average ticket to set them up in the right pricing program. We also want to make sure to find any monthly fees as well as to have all the pages of the statement. Keep in mind that to fully prepare an analysis for your merchant and be very accurate, you will need to have all the pages of the statement. We also want to take into consideration how many transactions are being keyed. How many of those transactions that are being ran are debit cards? And also, what percentage of those transactions are corporate cards? These are key factors in determining how to price our merchant correctly. We now know what to look for in a statement, but all the numbers can be overwhelming at times. Let's briefly review how each of these values are charged. Discount rates are seen as either percentages, such as a 1.69%, or a multiplier at 0.0169. Authorization fees are charged in cents and have several names in the industry. You will see them referred to as transaction fees, or trans fees for short, auth fees, watt fees, network access fees, or simply a per item fee, just to name a few. Just remember that a transaction fee is a per swipe fee. So every time the card is swiped or keyed at a point of sale, the merchant will be billed for it. Just like we discussed in the previous slide, Interchange Plus will be charged as Interchange Plus, a rate and an authorization fee. Here is a copy of an actual merchant statement. We have obscured the business information like the name, address, and merchant ID, but the financial values are real. Each processing company presents their statement information differently, but this example is typical. You have the total charges to the merchant as well as the summary of card deposits and fees. The summary of monthly sales will show you card types, number of transactions, total amount of sales, number of returns, and the dollar amount as well as the net deposits for each month. In the summary of card fees, you will see the breakdown of each card type along with the rates, fees, and total charged. If you would like to see a better copy of this statement, please find it attached in the Attachment tab. On page 2 of this statement, we see that the summary of card fees continues outlining the total Visa charges and all Discover transactions. We also see all the extra fees outlined as well as it shows the daily deposits of the merchant per batch. This slide shows the daily deposits of the merchant per batch. The merchant gets monthly discounted. You can match the daily batches on page 2 to the daily deposits minus the American Express transactions. We want to make a note that American Express transactions are deposited by a third party. Now let's dig a little deeper through each section. On page 1, the summary of card deposits will show you the amount of transactions and the total sales by card type. So, for example, there were 698 MasterCards in this statement at a total volume of $11,775.10, and there were 0 returns, as well as for Visa, Discover, and American Express. Keep in mind that we want to calculate all totals without American Express since they are charged separately, and this total is shown to us in the most statements as bank card total. In this section is where you will be able to find or calculate monthly and annual volume, the average ticket, and number of transactions. Let's calculate the average ticket. We find this by dividing the total Visa, MasterCard, and Discover monthly volume by the total Visa, MasterCard, and Discover transaction amount. So, that's $36,359.60 divided by $2,189, which equals $16.61. That is your average ticket. Now let's find out the annual volume by adding the total Visa, MasterCard, and Discover monthly volume and multiplying the processing active months, thus being $36,559.60 times 12 months, equaling $436,315.20. And that's what the merchant is estimated to process in one calendar year. Remember that by calculating the average ticket, you have an idea of what's going to be more important when pricing the merchant. Is it the discount rate or is it the transaction fee? Now let's take a look at the summary of card fees section. In this piece, you will be able to determine the discount rate, which is the rate quoted to the merchant for a qualified transaction, and the authorization fee, which is the fee charged each time an authorization is made. As you notice under MasterCard, you will see the words qualified, mid-qualified, and non-qualified. This means that the merchant is set up with a three-tiered pricing program. Let's figure out how they are priced. The first column gives you the volume where each card qualified. So here we see a total volume of $9,503.70 of qualified cards at 0.0158. Since this is a multiplier, it needs to be multiplied by 100 so that we can calculate the percentage. So 0.0158 times 100 equals 1.58%. So it is safe to say the qualified rate is 1.58%. The mid-qualified rate is at 2.33%, and the non-qualified rate is at 3.33%. Now let's take a look at the authorizations. Here, they are being charged separate for the authorization fee. Note that the count for the other item fees is 698, and it matches the amount of cards swiped on the summary of card deposits on the first page of the statement. And this charge represented as other item fee is 0.02 cents. Under auths and AVS, AVS stands for address verification. You will notice they are charging 15 cents on top of 730 cards. Even though the amount of the cards do not match, it is within a 5% window, which means that there were some cards swiped that were either declined and or had to be swiped a second time. As you can imagine, this happens in every business. These 730 transactions are 15 cents each, so we would have to add the 2 extra cents in the total transaction fee, bringing that to 17 cents. Last, you will notice on the far right to the total processing charges for MasterCard. The statement will continue to show the same units for Visa and Discover, providing you a full insight to the merchant's processing patterns. In the summary of miscellaneous fees, there you will find a total card fee, batch, chargebacks, statement fees, and any other monthly fees that the processor is charging the merchant. Now let me explain what each of these mean. First, the total card fees are all the processing charges for Visa, MasterCard, and Discover cards. Batch header, aka settlement, in other words, the closing for the day. This means that all credit card transactions for the day are closed and the information is sent for processing and deposit. Notice that there is 28 batches at 15 cents each. Returns. The merchant was charged 15 cents due to an authorization for a return of merchandise. The statement fee is a flat fee charged each month for the creation and mailing of the merchant statement. The statement shows a $10 charge for the statement fee. The next line item shows Pci Non-Valid Fee. This means the merchant is not currently up to date with PCI DSS validation. Therefore, there is a penalty charge of $19.95 per month until he meets his requirements for PCI security. And total charges. This is the total discount charges for the prior month's processing fees that will be deducted from the merchant's bank account, usually the first week of the month. Terminal and equipment fees. Lease charges do not appear on the merchant's statement. You will find this charge on the merchant's bank statement. Terminal rental fees generally appear on the merchant statement in the miscellaneous fees section. And maintenance and extra service fees for terminals or gateways will also appear on the merchant's monthly statement, usually under the miscellaneous fees section. Statement analysis is a very important part of what we do. Statements are ever changing and new fees are being added every day. Thank you for joining our presentation on statements.
हेलो जी, मेरी तरफ से सभी को राम राम, सत श्री अकाल, वाहिगुरु जी का खालसा, वाहिगुरु जी की फतेह। आप इसको बार बार देखिए, आपको हर एक बार देखेंगे तो कुछ ना कुछ सीखने को मिलेगा। मिस्टर टी, मिस्टर ए, मिस्टर विली और another people. Thank you.